Welcome back, guys, to another conversation here in the boardroom on CEO.CA. Joining us today is Grayson Andersen, who runs Stamper Oil and Gas, an explorer out in Namibia. And I think we've talked Grayson before, but it'd be beneficial for us to get a reminder of your assets out in Namibia, please, if you could start us off.
Thank you, Rachel. So we have 5 blocks covering 4 petroleum exploration licenses offshore Namibia, where there's 4 key oil and gas exploration basins. So we have PEL, the Petroleum Exploration License 107 in the Orange Basin. The Orange Basin's where we've seen major discoveries from Total Energies with the Venus discovery. We've seen Galp with Galp, which is a Portuguese company, with the Mopan discovery. And we've seen Rhino Resources with 2 discoveries so far this year. That's all down in the Orange Basin, and eventually that'll produce somewhere around 500,000 barrels a day for Namibia. We also have PEL 102, which is in the Lüderitz Basin, just north of the Orange Basin, and we think that's going to be very prospective over the coming years as exploration moves north. Now, what we're most excited about is our PEL 106 and PEL 98, which both blocks are adjacent to PEL, a petroleum exploration license held by Chevron, where they'll be drilling next year in the Walvis Basin. And the Walvis Basin, we believe, ultimately will be the biggest producing basin for Namibia over time.
And that's why you're most excited about 106 and 98?
Absolutely. Mm-hmm. That's why we're most excited about that. We're working with our partners now to get farm outs done on PEL 106 specifically, because that's a block that has 2 to 3 prospects it's over 1 billion barrels in size. So when it comes to super majors being interested in your assets, it has to have size and scale. Now, each one of these Namibian blocks is about 240 Gulf of America or Gulf of Mexico block sizes. So these are very large in size and scale, and the prospects that we have are very large as well, which make them very attractive for very large companies.
Now, around this time of year, time moves fast, right? So remainder of the year plans, but more importantly, what are you going to be hitting the ground with as we get into next year with your priority exploration targets?
So 2026 is going to be very exciting because we're going to be looking to execute with our operating partners to get some of these farm outs done on our blocks.
And how many partners do you have so far?
We have one main operating partner on each block, plus the state oil company Namcor. So what we're looking to do before the end of the year is, on one of our blocks on PEL 106 that I spoke of, there's a plan to do a 3D seismic campaign. So we'll be looking to get that, whether it's that starts before the end of the year or early in 2026, still to be determined. But that's critical to being able to really define the prospect sizes that we have. And then additionally, there's a lot of things that we're going to be working on, but also there's industry activity that'll help. Petrobras has been in the media saying that they're going to be coming back to Namibia, and we're hoping and expecting them to be in a block adjacent to one of ours. So that's a potential big catalyst. As well, Galp has said that they're looking to complete their farm out process on their Mopan discovery before year end. So there's things that we're working on that'll drive value, and then there's things that the industry will hopefully help the value for our shareholders as well.
Now, educate us about kind of the macroeconomics around oil, because right now the main headline that I'm reading is oil is depressed. Mm-hmm. But especially as a junior explorer, obviously looking way out into the future, at least a few years, outlook that you have.
Yeah, we're very constructive on oil prices longer term. In the near term, in the last 2 or 3 years, we've had an OPEC plus oversupply of 2 to 3 million barrels a day, which that's slowly but surely, coming to market, and that's what's causing the pressures on prices sort of in the short term. Eventually, that'll get used up. The global decline rate for production for oil every year, somewhere between 7 and 10% per year, which is per day per year. So that's that needs to be replaced every day. So if just to use round numbers, we're actually probably at about 104, 105 million barrels a day of global demand. We need to replace somewhere between 8 and 12 million barrels a day every single year of production. So this is why, I referred to size and scale for super majors. This is why we need big exploration discoveries to help offset some of those declines. So, we're constructive longer term on oil price, even medium term. I think in the next, it'll take 2 to 3 years maybe to work off some of the oversupply, but come 2028, 2029, and into the 2030s, there's really going to be a supply and demand imbalance, and that's when we see prices going back towards the $80 to $100 a barrel mark, which again will line up perfectly for when our developments or when our exploration starts turning into development and production.
And going back to where you are, the Orange Basin, anyone doing even basic level research in this industry can see it being described as one of the hottest areas for oil discovery. Beyond Stamper, what else in this area is happening that you can talk to us about in the next year?
So in the Orange Basin this year, we've had 2 big discoveries from Rhino Resources. They're partnered with a joint venture done by BP and Eni called Azul Energy. And those 2 discoveries sort of make it sort of 4 or 5 major discoveries down in the Orange Basin. And like I said before, that ultimately would become somewhere around 500,000 barrels a day. Earlier this year, we had Shell, who's previously drilled 9 wells there, sort of write those wells off because although they had really good commercial, they had good shows of oil and gas, they really didn't have maybe the reservoir to deliver commercial volumes. But having met with Shell recently, they said there's just too much oil in this basin to ignore it. So they're looking to drill again in 2026. So,
Okay.
You mentioned a really key term, research. And, initially you acquire 3D seismic and you evaluate that. And then you select your locations for drilling. And then when you have the results from the drilling, you integrate that then with the seismic model and you update what you call your sort of master geologic model. And Shell is going through that now. So when you have seismic data combined with well data, you eventually lead to better, more fundamentally based drilling decisions. And I think that's the kind of thing you'll see happening next year for them. Mm-hmm. And then you'll see others like Rhino and Total start drilling appraisal and development wells on their discoveries.
So far, as we talk, this conversation is packed with opportunity, there's potential here, but how does your stock re-rate? When does that happen moving forward?
So if you look historically at oil and gas exploration, especially large projects like the type of things that we're chasing, as I said before, there are things that happen in the industry that'll help us re-rate. If another big company comes into a block next to us, obviously that'll provide some credibility to the asset quality that we have. Valuation on transactions that happen around us, or if we can add blocks, things like that, that'll help us re-rate, maybe double in sort of share price type of thing, 50 to 100% type returns. But where the real multiple value happens is when we execute on our blocks and our plans. So we've seen with other companies, not only in Namibia, but in other places in the world, Guyana, North Sea, wherever it is, when you have a farm out announced, that's a sort of 3 to 5x type transaction. You add another couple multiple points when you get down to drilling. And ultimately, in order to get that sort of, 7 to 10 bagger or more, you need exploration success to happen on your block. And so it's that staged process. And we're going to be executing that staged process on all 5 of our blocks and the 4 PELs that we have over a period of time, so that ultimately you're going to turn what individually can be a high risk exploration program into a statistical model.
Yeah.
The more shots on goal, the more opportunities, the more wells drilled, the higher your chance of having that big commercial success and getting that, 7 to 10 bagger type opportunity.
And also, it's good to point out, it's difficult to pinpoint on when or like specific timelines, but at least you have confirmed with us here that there will be worked on across the entire block.
Absolutely. We're working on multiple things concurrently. And, it's really hard as a public company sometimes because stock markets trade 5 days a week, and you really can't do a lot in oil and gas exploration, especially the size and scale that we can every single day, 5 days a week, right? We're working on things methodically so that over the long term, we deliver a series of material catalysts that create significant long-term value for our shareholders. We're not the type of stock that you can sort of trade for earnings or you trade for, individual. You got to really look at, big catalysts and, the things that, the way these kind of stories trade is, they sort of bounce around for a period of time and not do a heck of a lot. But then when you execute on a transaction, the stock goes up 30, 50, 80, 100%. So it's hard for shareholders. And I, we really appreciate the shareholders that we have because for the most part, they're very patient. They see that 1, 2, 3 year sort of time horizon as giving us time to execute on our plan.
Yeah. And good for you for being here, making the time to talk to us in this month. Okay, we'll talk to you next time, Grayson. Thank you.
Thank you very much, Rachel. Thank you for having me again, and I look forward to speaking to you again.
So guys, it's STMP on the TSXV. Of course, go to CEO.CA. That's where people are talking, building a community where you can talk and search any stock like Stamper. Thanks for watching.